What's up, traders? Zach here from the Trading Network. I hope you guys are doing well. I am back today with another trade breakdown video, and I'm actually going to be breaking down a trade that took place today, FOMC day, after or right around the time where the FOMC news and statement took place. It is actually a very similar short trade to one of my previous scalping videos where I was able to lock in, I think it was about $12,000 in 2 minutes. Now today I was trading a different account where I am building cushion. So I was trading with a bit smaller size. I think my max size on this trade was 3 NQ contracts at one point. So a smaller trade, but very, very similar from a technical checkbox perspective. So what we are going to do is we are going to break down the technical factors in this trade, why I took this trade, why I managed it the way that I did, and I will also get into my TradeZella playbook and show you guys the actual technical checkboxes and the exact setup in my TradeZella playbook that you guys can copy for yourselves. Now, once again, this is a setup that we teach as a part of our Fundamentals of Futures Trading course. It is the short opportunity zone trade, and this setup consists of moving averages, major horizontal market profile levels, diagonal trend lines, which we call probes, as well as our momentum oscillators, our proprietary momentum oscillators, our volatility oscillators, and price structure itself. So without any further ado, let's dive into the charts here and let's break down this trade. Okay, so let's dive into this video here. I'm going to skip around because I'm not exactly sure when in this video I took the trade. Oh, I actually forgot about this. So I took a long trade. I'm pretty sure this was a losing trade here. So I got long. Let's just back up a little bit. I'm going to be extra transparent with you guys and show you guys this losing trade real quick. So I took a long, what did I get in with 2 contracts? Actually was up like 500 bucks on the trade, but it was a cavalier entry. You know, I should have been getting in like somewhere down here with a stop loss, you know, below here. And I realized that it was indeed a cavalier entry. So I cut myself out, and you can see here that I was actually back down to only $125 profit after that little impulsive trade, if you will. So just some evidence that, you know, not everybody is perfect, but you have to understand what the market is telling you. And what I saw the market telling me right there was essentially that sellers were stepping in. We were rejecting from a bunch of major market profile levels. We were rejecting from the opening range as well. And we were rejecting from the opportunity zone. We were also having a downside cross on our momentum oscillators, the Z cubed, which is a part of our proprietary indicator package. And you could see that the PMARP as well was looking to cross the signal line to the downside. Another thing that I want to mention is the BBWP, the Bollinger Band Width Percentile. This tells us when volatility is expanded or contracted. Now you can see we have a very high read here on the BBWP, which is telling us that volatility is expanded, right, after this big down move. Now, typically, when volatility is expanded, it will have a contraction move, and that is what I was trying to take advantage of. So most often, I like to see the BBWP low so I can take advantage of volatility being contracted and then be in for the expansion, but I was doing the opposite on this trade because I had so many other confluence factors. So with that said, I entered short for 2 contracts here on NQ at an average of 1571.75, and my thought was if we were going to continue to see selling pressure or sell side pressure, which we had basically seen, you know, this entire hour and a half leading up, or hour at least leading up to, you know, the FOMC news, then we were very likely to see a test of S1, and if S1 breaks, a test of S2. So you guys will see as I play this trade how it plays out and how I'm using these levels to my advantage. So trade works pretty well. I actually entered with my assisted algorithm, so that's why you see these flags here, because whenever I hit a button on my chart trader with my algo, it will create these flags just to make sure that I'm aware what the algorithm is doing. So you can see here that I will actually start to peel some contracts off. So I'm in for 2. Right? And then as price gets close to this prior swing low, as the PMARP gets down to the critical zone, which is under 10, I will start to peel one off. Now I do that because I want to, first and foremost, make sure that I am capitalizing on my trade. I mean, I already got 20 points on that move. When FOMC is going down, I mean, the market is extremely volatile, and I want to take advantage of the volatility, but I also don't want to lose control of, my plan or deviate from my plan at all. So you can see now I am trying to trail my stop loss on the price line, but price is moving so fast that I was having trouble actually attaching it. So this is, I think, a good example of, real world situations. You're going to have some scenarios sometimes where, you can't grab your stop and trail it quick enough, or you can't grab your stop and move it up quick enough, things of that nature. And I mean, price was just ripping. Yes, it was ripping in my favor, but I wanted to make sure that I was paying attention to what price was doing. I was making sure that I was capitalizing on this move and not allowing myself to give, too much of this move back, because I was already up, 20 points. I had already taken a good amount of profit. But at this point, I was considering and looking to add to this trade because it was working in my favor so well. So as Tom Hugard says, we want to lean into our winners. We want to add to our trades that are working well. And for me, I need technical support. I need technical reasoning to add to my trade. I'm not just going to blindly add to any trade that's working in my favor. I like to add either below swing lows if I'm short, right? Because a lot of people will be getting long here. Their stop losses will load up here, and that will allow me to add to my position and take advantage of all of these longs getting stopped out. And if you guys go back and you watch my scalping videos, you will see me add to my winners at areas like this over and over and over again. And that is truly how you can take advantage of retail liquidity and be on the side of the big players. You do not want to do what the herd does, which is when price is moving down, try to catch the bottom, try to catch a falling knife. Yeah, you might have been able to, catch a little long scalp there, but clearly sellers are in control, right? If sellers are in control, I want to join the sellers. I don't want to be a hero and, get my fingers chopped off by, once again, trying to catch a falling knife. So that's why I'll always join the side of strength. I'll never take counter trend trades, and I will add to my winning trades in trending moves on the breaks of prior swing lows when I am short, for example. So you guys will see me do just that very shortly. I'll click play here once again, and let's see how this trade continues to play out. So that actually, I forgot this happened. I actually re-entered this trade. So you can see here that I brought my stop loss to, 1551-ish using the trail technique. I have a video on trailing your stop loss on the price line. For those of you guys interested, I'll post it in the description here. And this trade ended up taking me out, leaving me with $875 profit. But that is not the end of this sequence. You will see that I wait for price to give me another entry. So I'm going to continue to fast forward. You can see price continues to reject from the opportunity zone. It sort of nestles itself up in this area where we have Fibonacci pivot point. We've got the overnight low from the 13th. We've got the opening range low from today. We have multiple moving averages. We have the 50 right there. And that gets me short once again for another 2 contracts, because this is the same exact setup over and over again. This is why the opportunity zone is such an amazing system if you can take advantage of it in the correct market environment, which is a trending directional environment, and that is exactly what we had. You can see that I also drew this trend line here, and that is just another technical checkbox to further support that there is a high probability the price is going to continue to move down, right? So let's click play here, and we'll see how this second trade works out. You can see that I'm already adjusting my stop loss. I entered once again with my assisted algorithm, so you can see it says right here, short enter, and I start to trail my stop. Now, once again, I did not have my stop trailing perfectly. I had to adjust it because typically, not during FOMC times, if I trail my stop on the price line, I'm using maybe a 40, 50 tick buffer. And during FOMC, price is so volatile, I almost have to use double the buffer, closer to like 70, 80, 90 ticks. So that's what I'm doing. I'm just adjusting my buffer, and you can see as price pulls down, my stop loss also pulls down. Now on this trade, this is where I add an additional contract. Now you can see once again, same concept. Buyers get in here, their stops are here, boom, stop run. Buyers get in here, their stops are here. And let's see what happens here. So you can see I add a sell stop right there. Boom, price pushes through that prior swing low, fills me for another contract. So I am now short for 3 contracts on NQ. And I am looking at a target of Fibonacci pivot S1, which has great confluence with the regular trading hours high from June 12th at 1511. There's also the third lower deviation of VWAP there as well. So great confluence, multiple major levels there. Price working in my favor, and I don't really need to think about the trade very hard at this point. Yeah, I'm watching my stop loss. I know the stop's trailing, but when price is working for you, when you can clearly see, right when I added, all of these long stops just got absolutely shredded through, and you can see how price moves as well. You can tell the velocity of price when it is moving through stop losses. You see that? You see that price action right there? That is a bunch of long stop losses being shredded through. And that is one of my favorite things to see when I am trading. There's a little sound effect from the live stream when I was recording this trade. And I was just saying that this is one of my favorite things about price action, understanding liquidity and understanding how you can take advantage of retail liquidity. It truly feels like taking candy from a baby when you get into these setups. They work so incredibly well. So you can see, I'll back up just because I was talking a little bit when that take profit got hit. So, price just rips down to my first take profit here, basically right between S1 and that high from June 12th. And at that point, when I start to take profit, when I start to get close to my targets, then I implement or engage my contingency plan. And my contingency plan is basically, okay, now I'm at my target. If price puts in a local low or something close to it, or a local low and a higher low, I typically will manually close the trade at this point. I think I let it go a little bit further. Yep, you see it kept pushing down, and the stop loss kept moving, kept trailing, and price just continued to work in my favor. So I don't choke myself out of the trade. I don't cut myself out because we don't even have a local low. We don't even have one bullish bar closing above the top of the prior bullish bar. So that's what I'm waiting for. And that is my contingency plan. Once the local low happens, I exit, and you guys will see what price does after that. So price continues to move down. My initial entry, I don't even remember what it was after I added here. Let me see. Yeah, initial entry was what, 51 on this, I think? Yep, 51. So this was, when all said and done, 70-point trade, something like that. So you can see right here, I'm allowing price to move down, but I am making sure that A, the stop loss is trailing, and B, that I am ready to close the trade if I see something that I don't like, if I see, local low, higher low, something like that. I believe that I do just, let the stop loss get hit at about 25-ish points in profit because, I was trying to see if I could capture the rest of that move down to Fibonacci pivot S2, but price came up, stopped me out in profit, and that was the end of that trade. So I'll just fast forward, show you guys here. Local low. Yeah, I could have closed on this local low. That's a contingency plan that I have a lot, where you have this bar close above the top of the prior bar. And that is a great signal to get out because oscillators are straight up. We've got major levels. We've got levels from today. We've got prior overnight low. We've got multiple levels down here as well, not too far away from that. So not a bad area for a bounce when it comes down to it. But this allowed me to basically lock in. This whole sequence, I was up 495. Then I was down to $125 profit, and consider that two scalp trades in about, I don't know, maybe 7 minutes, where I was able to lock in about $2,500. Nothing crazy. Yes, I was using smaller size, but I think this is more realistic for most of you guys. You guys don't really need to see me trading 5, 10, 15 contracts because most people aren't going to be trading that kind of size. Most people are going to be trading 1, 2, 3 contracts, especially starting off as you guys build up cushion in your accounts. So with that said, I'm going to bring up TradeZella now, and we are going to go through this trade and the technical checkboxes in this trade. All right, my friends, so here we have TradeZella. For those of you guys not familiar, TradeZella is my journaling platform. I would highly recommend you guys checking it out if you are still using something like Excel or Notion or doing manual journaling, you're missing out on a ton of amazing information, a ton of very helpful data. And when it comes down to it, a very easy way to gather your data, analyze it quickly, and learn from it. So I use TradeZella on a daily basis to mark up my trades, to journal from a trading psychology perspective, to make sure that all of my trades are playbooked, and to build new playbooks. So this specific playbook play is one that I teach within our Fundamentals of Futures Trading course. It is the short opportunity zone trade. Now, the technical criteria that make up a short opportunity zone, or that make up an A+ short op zone, are: first, we must have a downtrending market, which we do indeed. So we're going to go ahead and check that. We also must have a local top. I'll go ahead and pull up my trade markers here so you guys can see, and we'll zoom into the actual entry so you guys can see the exact detail. So checkbox after the downtrending market, which we've already established we have, is a local top. Now, for those of you guys not familiar with what a local top is when a bearish bar closes below the low of a prior bar. So simply, this bar just closing below that is my entry signal. As I always say, I will never enter a short trade without a local top, and I will never enter a long trade without a local low. So if you guys want to learn more about what a local top and a local low is, I actually have a video teaching that and giving examples on that as well, which you guys can find on the TA playlist. Now, the next box that we have to check, or that we should be checking, is a lower high. And we do indeed have that. And that is one of the reasons why I re-entered this trade. Here's a high, here's a lower high, and here's another lower high right there. So we are continuing to make lower highs and lower lows, generally speaking, which just further confirms the price structure that sellers are in control and remain in control. So we're going to go ahead and check that lower high box as well. Now, the fourth checkbox is going to be oscillator structure. Now, we do indeed have some great oscillator structure with our Z-cubed momentum oscillators curling and crossing to the downside at the same time that price is printing that local top. Now, we also have the PMARP crossing the signal line to the downside, and we have the BBWP crossing the signal line to the downside as well. Now, we also have delta confirmation. Now, I don't have delta confirmation on this entry criteria because it's not something that is super important for me to take this setup. But if we really want to get down to it, I mean, we have a lot. We have an extra checkbox that's not even on here. So let's just go back real quick and check the rest of the boxes. So we have oscillator structure, which I just demonstrated right here with the PMARP, the Z cubed, as well as the BBWP. One thing we do have as well is a little bit of divergence here, right? So you can see that price is making higher highs and the oscillators are making lower highs, and the PMARP is also divergent as well. So we have bearish divergence. Now, the next checkbox is going to be a major level. A major level, ideally a market profile level, VWAP deviation, or a Fibonacci pivot is what I consider a major level. I never plot my own manual support and resistance lines. The market does it for me. The market profile does it for me. Fibonacci pivots does it for me, and VWAP deviations does it for me. So I keep things very simple in that regard. And I think that's another point that a lot of traders get confused on, is they aren't confident in their levels because they plot them themselves. The market profile is my map. It is my liquidity map, and you guys can see very clearly over and over again throughout all of my scalping videos, throughout all of my market profile analysis videos, how well this stuff truly works. So we have the major level indeed. The major level, we actually have multiple major levels. Fibonacci pivot point right here. We have the overnight low from June 13th. And I think that we have right here, even though I can't quite see the label, that is the opening range low as well. Yes, it is indeed. So we have actually 3 major levels, just making this significantly higher probability. And the more major levels, the more protection you have for your stop loss. Think about major levels as barriers of liquidity. Price needs to chew through this level in order to move up and stop me out above, this level or this level or this level. And that's why the more major levels that you have that you can base your risk off of, that you can put your stop above when you're short or below when you're long, is going to, give you so much more confidence in the trade and make you feel that much more comfortable that you are protected. Your stop loss has protection, and it's not just, sitting out somewhere in no man's land to get grabbed on a liquidity run. Now, last but not least, for our final checkbox, we have the opportunity zone rejection. This is the opportunity zone itself. If I scroll out here, you guys can see just how well the opportunity zone truly works in a trending market environment. And it really can be that simple. Wait for the market to give you the appropriate environment for your playbook play, which is a downtrending market, and then capitalize on it. So this was indeed an A+ setup. Once again, this is a smaller account, so only using a few contracts max, but locking in $2,500 in a matter of 6-7 minutes on NQ on FOMC day with small size is very, very realistic if you guys have a system, if you understand that you must have the appropriate market criteria or market environment for your playbook plays to work most appropriately. Now, you can see here that I also have exit criteria, and I started to exit on my major levels and local lows. So in this scenario, I actually used both of my exit criteria to take profit, two different ways. So I started to peel as we got to my major level, and then we put in a local low. Yes, I should have probably closed like right here instead of, letting the stop get hit, but pretty negligible when it comes down to it. It's a great trade. Now, I also want to point out that you can add different categories or different criteria in regards to market conditions, exit criteria, and entry criteria. So I also have the trending market conditions down here just to reinforce that a downtrending market is indeed the first and most important criteria to even consider taking a short opportunity zone. So just to show you guys, I don't just blindly short the opportunity zone unless we are in a clear downtrend. If we're in a range, I don't trade the moving averages because moving averages are trending tools. And that is something that is so important for you guys to understand. If you are struggling, even if you have, one trade setup that works, understand that that's not going to work all the time. And that trade setup that you are using that is working is likely for one specific market environment. So what we do in the Fundamentals of Futures Trading course is we teach you guys a trending, ranging, and reversal strategy so that you guys are equipped for all market environments. So you can see here, if I click on all my playbooks, I have a long and short 3-step shift. That is my reversal strat. I've got a long and short momentum flip. That's my ranging strat. And I've got a long and short op zone. That is my trending strategy. So if you guys, once again, are struggling to have different plays in the playbook for different game environments, check out the Fundamentals of Futures Trading course. I promise you, you will find immense value in it, and you will very likely solve a lot of your problems by keeping things very simple and following our recipes, if you will, just like this. So with that said, guys, I want to first and foremost thank you very much for taking the time to watch this content. If you do enjoy these type of videos where I show you guys my playbook, my journaling, my breakdown, my technical checkboxes that go into my high probability setups, please feel free to like, subscribe, and make sure that you also click that bell notification to be notified every single time we post videos here on the channel. If you guys want to learn more about what we do at the Trading Network, check out our website, thetradingnetwork.io, where you can purchase access to our most popular offering, the Trading Network Pro Trader Bundle, which gets you lifetime access to our private Discord where we live stream our trading Monday through Friday starting at 9:30 a.m. Eastern Time. It also gets you access to the Fundamentals of Futures Trading course where I teach these very strategies that we were just discussing. And last but not least, it also gets you access to our proprietary indicator package. So you have clear and concise systems. You have a community to trade with on a daily basis and learn these systems with, trading live. And you have proprietary tools that were engineered specifically for these strategies to remove as much guesswork as possible. So if you guys have any questions about anything that I've mentioned, please feel free to drop them down in the comments below. If you are interested in a more tailored and catered one-on-one experience to your strengths and weaknesses as a trader, I also offer one-on-one mentorship, which you can learn more about on our website. You can book a free 15-minute consultation with me to chat with me for a little bit, see if mentorship would be a good fit for you. And if you have any questions about that, you can also email us, shoot us a DM on Instagram, and we will get back to you and help any way we possibly can. Thank you guys once again. I appreciate you very much, and I will see you in the next video. Cheers.